What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover everything related to stocks and investing. The first half of 2022 has been historic, with the S&P 500 falling more than 20%, the worst first half performance since 1970. The tech-heavy Nasdaq 100 has performed even worse, losing almost one-third of its value over the past 6 months. As expected, most investors are sitting on huge losses that could take years to recover. But against all odds, some investors have positioned themselves well for the bear market and have made massive gains. In this video, we'll be looking at the Wall Street Bets forum to see people who made hundreds of thousands of dollars from the market crash, as well as those who've lost everything. But before we dive in, make sure you signed up for our daily newsletter at wallstreetmillennial.com/newsletter. It's delivered straight to your email inbox at 5 AM every morning of the trading week, and has everything you need to know before taking on the day. For example, last week we put out a newsletter going over the potential buyout of Robinhood by the crypto exchange FTX, the day after rumors of the deal started swirling around in the media. In just a few minutes, you can prepare yourself with all the market due diligence that we do for you. And the best part is, it's completely free. Go to wallstreetmillennial.com/newsletter to put your email on the mailing list, and start receiving the newsletter today. And now back to the video. First off, we have user Moonies, who has lost 88% of his portfolio, and the chances of a turnaround are looking pretty bleak. He started with about $45,000, and in the beginning he only owned shares. His stock picks didn't do very well, and the value of his portfolio gradually drifted down by $20,000. Then he started using options. The change in strategy initially worked very well, with a $70,000 gain in the first week. But soon thereafter, he proceeded to lose everything. Today he's sitting on an 88% or almost $40,000 loss. So what types of options was he playing? Surprisingly, his losses came from puts, not calls. He said that the share prices of companies that are overvalued or useless must come down. The companies that he thought were overvalued included DoorDash, Bed Bath & Beyond, DraftKings, Airbnb, Coinbase, Zoom, Altria, Palantir, and Ulta Beauty. Every single one of those positions was in the red. This is kind of surprising. A portfolio of put options on mostly tech stocks should have performed brilliantly in the current market environment. Yet this Wall Street Bets user still managed to lose 88% of his account. For example, one of his biggest positions was DoorDash puts, expiring on July 1st. The stock closed at $68 per share, just a few dollars above his strike prices, which range from $60 to $64. DoorDash has fallen by 53% year to date. Just a few more percentage points down, and this trader's puts would have printed massive gains. But instead, they expired worthless. Some of his other positions did end up making money, with his $51 strike Coinbase puts expiring $2 in the money. But this $2 gain wasn't enough to cover the premium that he paid when he bought the options, so it was still a loser. This shows how difficult it can be to make money with puts. He correctly called the bear market, but his strike prices were too aggressive, which led to his eventual downfall. While things are looking pretty bleak for this Wall Street Bets user, there's still a small window for a turnaround. He has $9 strike puts on Palantir expiring in 1 week's time. If the market crash continues just a little longer, he might make back some of his losses. Next off, we have a more successful put options play from user Chloe Stella. This investor had a bearish view on the market, so she loaded up on a massive position of 200 put option contracts for the QQQ ETF. Remember that options contracts represent 100 shares each, so this position covered 20,000 shares. The total cost of initiating this trade was in excess of $500,000. The QQQ ETF tracks the Nasdaq 100 index, which is dominated by mega-cap tech stocks. These stocks have been some of the hardest hit by the Fed's rate hikes. With a strike price of $315, her puts are now more than $30 in the money. You won't be surprised to hear that this led to massive gains. Her position is now worth $800,000, representing a gain in excess of $250,000. Congratulations on this life-changing amount of money. Next off, we have a massive loss from user Tower of Satan, who is down $30,000 on his PayPal position. PayPal was a major pandemic beneficiary, as people used it to send and receive money via the internet. PayPal stock became very popular among investors, with Jim Cramer being a major believer in the company. The share price more than doubled at its peak in 2021, but after that it started to decline precipitously. When user Tower of Satan saw that the stock was down 50%, he thought the selling was overdone and it was due for a rebound, so he initiated a position. As it turns out, he was trying to catch a falling knife. As the share price declined, he reduced his cost basis by adding to the position a total of 69 times. To date, the stock is down more than 70% from its highs, and this Wall Street Bets user is down 50% or $30,000. And there could be even more downside ahead. One commenter did an intrinsic value estimate for PayPal. He thought that the company should be worth $50 to $60 billion. This is 30 to 40% lower than the current market cap of $82 billion. Part of the reason for this user's poor investment returns may be his total lack of due diligence. He openly admits that he knows nothing about PayPal and did zero research on its fundamentals. He just saw that the stock was down a lot and was expecting a 20% bounce.
Stop it. Get some help.
Better luck next time. Next off, we have a gain that's not quite as impressive in terms of dollar amount, but more than makes up for that in percentage terms. In just 20 days, user Com Radio has turned $200 into $1,653. This represents a 725% gain and puts him within striking distance of 10-bagger status. He achieved this by making a huge number of options plays, both calls and puts. For example, on June 30th, Tesla's stock price opened down. He used this as an opportunity to load up on call options expiring the next day. The stock increased 2% from open to close. This was enough to rise above his $670 strike price, causing the value of his call options to increase by 50%. He sold it the same day for a $500 gain. Not bad for a day's work. He also made a huge number of put option plays on the QQQ ETF, most of which paid off handsomely during this current bear market. In mid-June, he made a small play on Dogecoin, but luckily he sold it that same day and only suffered a 42-cent loss. The percentage gain is undoubtedly impressive, but many commenters are skeptical of its sustainability. One user says that the OP guessed correctly, suggesting that the gains are more the result of luck than skill. But to the OP's credit, he is being smart about what he's doing with the gains. He took $1,100 of the gains and bought value stocks, which he intends to hold for the long term. The remaining $500 he will use for more options plays, in an attempt to repeat his success and fulfill his gambling needs. Even if he loses the entire $500, the $1,100 of stocks that he owns would still be 5 times greater than the $200 that he had to begin with. Congratulations on this epic win. Next off, we have another massive gain from user Ric Flair's Cape, who 5x'd his portfolio over the past few months, taking it from $50,000 to $250,000. Given the recent market environment, the only way to make these types of gains is by shorting the market, which is exactly what he did. He made these gains by using put debit spreads on ETFs and stocks. He would buy a long-dated put, and after the stock dips, he would sell another put at a lower strike price. This strategy locks in some of the gains at the expense of reducing the upside potential if the share price continues to fall. One of his biggest gains was on Tesla, where his puts printed massively as the price has been almost cut in half year to date. While Tesla has been remarkably successful in recent years, they have recently run into supply chain issues which have slowed down production at their new gigafactories in Texas and Berlin. The problem has gotten so bad that Elon Musk himself has called them money furnaces. But not all of his plays were on high-flying tech stocks. He also bought puts on Goldman Sachs. Like all investment banks, Goldman Sachs benefited tremendously from the market bubble of the past 2 years, as they raked in lucrative fees from SPACs and IPOs. With the recent market crash, the tides have turned completely. Investors have no appetite for money-losing tech startups, and the total value of IPOs has fallen by 90% compared to the year prior. This will mean a massive decrease in fee revenue for Wall Street, and they're expected to announce massive layoffs later this year. But one man's pain is another man's gain. The market decline has benefited this Wall Street Bets user to the tune of $200,000. Congratulations on this epic gain. Alright guys, that wraps it up for this video. Have you experienced any epic gains or losses in the recent bear market? Let us know in the comments section below. Also, don't forget to sign up for the Wall Street Millennial newsletter at wallstreetmillennial.com/newsletter. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.